In the US, the bottom 50% of the households own less than 4% of the nation's wealth. The economy seems to work against you. For some reason, prices are higher and higher, and your salary seems to never be able to keep up. Today, I want to provide you some valuable lessons that you can use in your daily life to get out of the possible financial pain that you're experiencing right now or your family. How can you learn the rules of the game so you can benefit too? The hard truth is that capitalism is not about hard working. It's not about working 12 hours every day and not having holidays. It's about knowledge. And if you're not prepared for it, you might sweat your future into poverty. Let's get into it. We all have heard that inflation is when a bank prints more money. If everyone has more currency, obviously they can use that currency to buy the same products for more amount. Now the question would be, okay, and what's wrong with salaries? Can, for some reason, prices grow slower than my paycheck? In the long term, the answer is no. The reason is very simple. Your salary is actually a liability for the company that you work for. And that means that in the world of a free market, in the world of capitalism, your company is incentivized to reduce liabilities and improve profitability. It's not that your company is against paying you fairly. It's not that it hates you. It just needs to maximize competitiveness. And let me be very clear, this is not any evil capitalistic partner petting a cat and drinking whiskey in a dark apartment in Manhattan. This is how the system works. Capitalism works in favor of owners, not earners. Owners. It doesn't matter if you earn a lot. It doesn't matter if you work every day 12 hours and take no holidays. It doesn't matter if you're extremely clever and intelligent and very hardworking. All it matters if you own assets or not. So what are exactly assets and why do you need to own them? What's special about them? An asset is basically anything that puts money into your pocket or that increases in value over time. An asset is something that you own that works for you even when you're not working. It can be physical like a house or like a kilogram of gold, but it can also be intangible or digital, like the famous cryptocurrencies that we keep hearing about. Okay, I understand that, but why do assets increase in value over time? The first type of asset is very clear because they put directly money into your pocket, but what about the other type of assets that don't do directly this? How does the reevaluation of the price works? The super simple answer would be they increase in value because people think that they are valuable, meaning there is demand for that. And if a lot of people want them because they are considered valuable, it means that a lot of people are going to fight and compete for owning it, for acquiring it. And therefore, if everyone is competing to own and acquire these assets, if everyone has more currency because the bank printed more money, then they have more money in order to acquire those assets. So they will pay more amount of currency for the same amount of gold because they have more. Even more if the availability of this asset is very low in the market. It's very hard to get your hands on it. Of course, this is much more complex than just that. There are many types of assets for different objectives and all of them grow in different rates, but this is the main idea. Okay, so now I know why my salary can actually not keep up with the economy, and on the other hand, why owning assets might be the solution to my financial pain. Good. So how do I own assets and what type of assets are there? I want to keep it very simple because I want this to be extremely beginner friendly. The idea of this video is not to give you the most outstanding explanation of the depths of investing. It's to give you an introduction so you can understand how the system works. There are three main types of assets that you need to know. One is physical assets or tangible assets. It can be things like gold, like silver, even artwork. They are usually bought in order to keep your wealth over time. They are usually long-term investments to protect yourself from inflation. The downside is that they are usually expensive to buy, and not so easy to sell quickly. It's more about stability and preservation of your wealth than about growth. Then you have financial assets. They are the typical bonds, ETFs, stock. This is where most people start because, in opposition to physical assets, you don't need to own a lot of capital in order to buy them. You can own a fraction of a company. That way, you own a small portion of the economy. The beauty of financial assets is what's called the compound interest. They grow quietly in the background while you sleep, as long as you stay invested. Now, inside of financial assets, I want to make emphasis into SP 500 and Nasdaq are the most common, at least in the US. When you invest in this type of index funds, you are not investing in one specific company, you are investing in the whole economy as a whole. The SP 500 is made of the 500 biggest companies in the US, and if a company falls off, it will get substituted by another company. That's why over time it always goes up. Now, this does not mean that the market cannot crash, as it already has, but it means that if you wait long enough, it will always recover, it will always goes up. Because as long as people keep building, keep working, and keep producing, the system rebuilds itself. So when you invest in this type of index, you are not betting on a company, you are betting in the whole economy. Finally, digital assets. These include things like cryptocurrencies, online businesses, patents. These assets can scale faster than the rest, but they also carry a higher risk. You should buy or build these once you have a safe foundation. Because let's be honest, the only reason why would you sell Bitcoin when it's low and not high is because you need the money. And you will only need the money if you don't actually have already a secure and stable base to take funds out. Now the question is, okay, now how do I do it? I want to make this very practical. I'm going to give you 3 golden rules. Let me be very honest with you. Investing is extremely simple, but it's extremely difficult. You need to know these 3 rules and you need to apply them, whatever you feel and whatever you think in the moment. Rule number 1, invest consistently. You will never outsmart the market, but you don't have to. Wealth doesn't come from predicting what will happen next month or next week. It comes from staying in the game long enough so that compound interest works for you. Invest a fixed amount, whatever you can. It doesn't need to be a lot. Whatever you earn, take a fraction of it and invest it regularly into the market. It doesn't matter what it does. It doesn't matter if it's high, if it's low. It doesn't matter. Because as I told you before, the overall economy will always go up, will always grow. So even if sometimes the market goes up and then goes down and then goes up and then goes down, don't panic. This is the shorter vision of a longer curve that goes up. I hope this is clear. I don't want to deep dive into technicalities or mathematics, but this is known as dollar cost averaging. You can look for it. Rule number 2, diversify across assets. Never rely on only one stream for your investments, because every asset shines in different economic climates. When stocks fall and the market goes down, people go to gold and then gold increases in prices. When gold is going down, maybe cryptocurrencies are exploding. Diversification does not only protect you, but is key for the third and most important rule of all. Never sell low. Yeah, what an expert you are. Never buy high, never sell low. Everyone knows that. Of course, everyone knows it. Now the question would be why people still does it, even if they know. And the reason is very simple. They need to sell because they don't have other income. They need to sell low because they need the cash for something else, because they don't diversify. If you have different income streams or different assets, you don't need to sell the ones that are low in order to earn the revenue. The beauty of investment is not needing to sell low when the price is low. So if you need some cash now because you need to buy a car, you need to buy a house or whatever, You don't need to sell your cryptocurrencies now that it has lost 90% of the value. Maybe you can sell your gold, maybe you can sell your stock, maybe you can sell Nasdaq, SP 500, whatever you feel like it. Commodities, whatever it is. Remember, never sell low. Keep it. Especially if you invest in SP 500, in Nasdaq, all these type of indexes, you are not betting on one company, you are betting in the economy, and the economy always goes up. You just need to wait enough. And in order to be able to wait, you need to have enough resources to sustain yourself during the 3-5 years that it needs to come back. If you can only remember one sentence from this section is, you don't need to predict the next crisis. You just need to survive it without selling. The truth is very simple, but a little bit uncomfortable. The economy was never built to reward labor or effort. It was built to reward ownership. Your salary might help you to survive, but if you want financial freedom, you cannot do it without assets. And the beauty of it is that you don't need to be rich to own assets. So when all these financial gurus like Gary's Economics tell you that the rich are taking out all the possibility from your hands to own assets, they ignore the fact that you can own even an asset for $1 if you own fractional shares. You don't need to be rich to own assets. You just need to know the correct mentality and understand that that's exactly how the system works. And the beauty is that everyone can own assets. Everyone can benefit from the growth of the economy, not only the billionaires, not only the rich. It doesn't matter how much you earn. If you save a little, save whatever you can and invest that bit, and over time, your wealth will grow. Of course, that doesn't sound as attractive as tax the rich, fight for inequality. Yeah, of course, it doesn't sound that right. But what I want to give you is some real, actionable truths to improve your life. So if you can only remember one sentence from this video that I will say it's very long already, is capitalism doesn't reward earners, it rewards owners. So learn the rules, play the game, and make sure that the system works for you, not against you. Thank you for coming. I hope you learned something today. Keep thinking about it, especially if you're in your 20s. This is a vital moment in your life to be able to improve your financial stability in the future through compounding interest. Have a nice day. Take care. Bye-bye.